How are customs duties and taxes calculated for imported goods? Ever wondered why the price tag on your imported smartphone seems higher than its original cost? You're not alone. Many of us have scratched our heads at customs fees and taxes on goods coming from abroad. But why do we even have to pay these extra charges? And how exactly are they calculated? Stick around, as today we're diving deep into the world of customs duties and taxes for imported goods. Imagine you order a limited edition pair of sneakers from another country. You're excited, counting down days until they arrive. But when they do, there's an additional bill for customs duties and taxes. Why does this happen? Let's unpack it together. First off, customs duties are like a ticket fee for your goods to enter your country. It's a way for governments to control the flow of goods in and out of a country, protecting local businesses and generating revenue. But how is this ticket fee calculated? It primarily hinges on four elements: the value of the item, its classification in the customs tariff, its origin, and sometimes, its intended use. Starting with the value, it seems straightforward, right? Most countries use the transaction value of the item? Basically, what you paid for it. But it's not just the price tag. Shipping and insurance costs often get added into the mix. Now, onto the classification. Every item imported has a specific code, sort of like a social security number but for goods. These codes determine the rate of duty applied and depend on the item's nature, material, and purpose. It's a complex system, akin to a library's catalog but for everything from sneakers to smartphones. And yes, sometimes it gets as detailed as distinguishing between wool socks and cotton socks. What about the item's origin? This is where trade agreements play a role. Goods coming from certain countries can have lower duties or none at all, thanks to free trade agreements. So, the same pair of sneakers could have different duties if they were made in one country versus another. Now, let's take all we've learned and apply it to an example. Imagine you're importing a camera worth $1,000, including shipping and insurance. You discover its classification code dictates a 5% duty rate. So, your customs duty would be $50. But wait, there's another player in the game: taxes. In many countries, imported goods are also subject to a value-added tax, VAT, or goods and services tax, GST. This is calculated on the total cost to import, including the product value, shipping, insurance, and yes, even the customs duty. So, if the VAT rate is 10%, you're looking at an additional $105 on top of the customs duty. It can feel overwhelming, like a puzzle where the pieces keep changing. But understanding this process is crucial, especially in today's global marketplace. Whether you're an entrepreneur importing goods or an excited shopper waiting for an overseas package, these charges affect you. Before we wrap up, let's not forget why this matters. Customs duties and taxes protect local industries from global giants and generate significant revenue for governments. They play a critical role in the economy, balancing trade, and supporting public services. So, next time you order something from abroad and wonder about the extra charges, remember the journey those goods have taken. Not just across oceans and continents, but through a web of regulations and agreements that keep our global marketplace ticking. If you found this enlightenment journey through the maze of customs duties and taxes helpful, don't forget to like, share, and comment below. What's your experience with importing goods? Any surprises or tips you'd like to share? Let's keep the conversation going. And there you have it, a closer look at the unseen costs of bringing the world's marketplace to your doorstep. Till next time, keep questioning, keep learning, and as always, stay curious.